Good morning, ladies and gentlemen. Happy Saturday to you all. I know it's not Friday, it's Saturday, so a little late on the viewer requested ticker Friday for you guys, but however, we were doing all the live stream, so we really didn't have time to record this. And if I sound a little parched, we just finished the live stream, so I'm recording this as of later last night. So please forgive me for that, but without further ado, let's dive into the video and get started with the tickers. We're going to start with NXST, Next Media Group. So the chart is a 50-50 split. So why do I say that? You had a big push down on the company. You form consolidation and pushed up. So you have two options. This is either a dead cat bounce, which is coincidentally 50% of the retracement. You're sitting, the 50% retracement is $168.50. The low here on this candle was $168.62. So missing it by 12 cents. If you break the low of this candle, I'm going to say this is a continuation to the downside, possibly forming that a massive, and I mean massive, A to B pattern, B to C, that completes down in the $125.82. Now, if it's not an A to B pattern on the way down, instead an A to B pattern on the way up, we definitely could see continuation to the upside, saying your A to B leg, B to C, and it continues up into the $191.08, which would pretty much fill in a lot of this price action over here. And just to see on the MACD, you are supporting yourself there. So we can take a look that the MACD is starting to curl, could have the continuation upside. I don't like the wick on the close of Friday. However, one candle don't make a trend. Trend is starting to have a downslide, bouncing, probably forming a lower low. That's what it appears. And now we need to start making higher highs. So once we have this big push, or if we have this big push to the upside, breaching above the $180 region, I'm going to round it up, that'll be a higher onto the upside. RSI is sitting right at that 50 point. So we definitely could see more continuation up to the upside. And then let's just quickly jump over the weekly, see what it's telling us. And more upside potential. Definitely you see a weekly MACD pinching together, and then the RSI needs to basically continue up on the weekly to have a continuation. You have a doji on the week, so that's showing a decision. You did actually close above last week's low, so that is bullish. You have a failed breakdown and you have reclaiming of that low, so definitely could see that continuation to the upside. And like we said, up into that $190 region, $189 region, so definitely bullish on the company just looking at the daily and the weekly chart. Next, we're going to go into BGFV. So taking a look at BFVG, Big Five Sporting Groups Corporation. This is kind of reminiscent of Credit Suisse and FRC. Basically had a big push up, never really reclaimed, just making higher or lower lows, I should say. And it's just crap. I'm sorry to say this, but this company is basically a very, very junk company. I don't see any value in it. MACD isn't really showing anything strong. Creating basically the only positive sign I would say here is you're creating a MACD divergence. So this thing could rip up for a short-term rip up, similar to how you had back here. Had a rip up, sold off, rip up, sold off, rip up, sold off. And maybe even with this candle being very wicky, let me zoom in for you guys. Candle being very wicky, that may be a rip up, and you may just continue sliding downwards on the stock. Until the stock shows some form of life, I wouldn't necessarily be getting into it, and it's just a very poor structure. You have a lot of price actions above, so really once it takes out these price actions, maybe gets above $20, I'd be looking at it for an investment. But the weekly just looks horrible, and the daily is showing you could curl up, but it's just, there's better companies out there, guys, to invest. I would not recommend investing in this company. The technicals just look like absolute garbage. And yes, you could have the intraday plays, but majority of people that invest or trade aren't doing the intraday plays. They're not day trading just because you need 25K to do day trading, just not get patent day traded. And with that, we're going to actually move on to the next company, because I don't want to give you guys advice on a company that I do believe will lose you money. So now we're going to go to MASI. So Messina Corporation basically has a nice strong move to the upside, definitely showing higher lows and higher highs. You did have a big sell-off now just because you did tap the reversal zone, and which makes sense. Your MACD is actually showing relatively coming back down to this low here. So if you start having a little more price depreciation, you will create a basically MACD divergence. But I do think the MACD has the capability to curl up. RSI is below the 50 line, so we have to be cautious with that. However, this could either be a dead cat bounce, where we continue lower but form that divergence, or we could be going higher, forming a new basin, probably if we're going to form a new basin, it's going to consolidate sideways first. And if it does consolidate sideways, that MACD will give time to curl up, RSI will curl up, and then basically you have a continuation higher, leading to possibly an A to B pattern, B to C, here on the way up to $212, smacking your head again in that reversal zone and probably creating more price structure on the way down when you have that eventual pullback. Let's take a look at the weekly just to see what it's telling us. So weekly, you have a failed break up and then basically a continuation to the downside. So it's showing a little less strength on the weekly graph. You are in that price action zone or price targeting zone here. So easily could come back down to $180. So definitely keep an eye on that. And also as long as this upwards trend basically holds, then the company is bullish. You break the trend, you're basically going bearish, which would be right at this trend catcher area. I don't like how the MACD basically is pinching together on the weekly and you were super oversold and you're coming out of that region. That gives me a little cause for concern, especially because you had this big, massive sell-off in this region. So you're coming into what could be a possible price action zone there. So all that combined, along with the strong sell signal there, you definitely have the possibility to go lower, but you also have the possibility to curl back up and continue higher. It really depends on how the next week closes. That would pretty much confirm if this is a busted pattern or is actually validated versus the daily just giving you small intraday signals or smaller time frame signals. Now, for the upside, like I said, you got that 220. For the downside, probably a good buy point at $172. That would really create that divergence. Weekly probably would have crossed at that point, and maybe we get the divergence on it as well, coming back down maybe to the localized highs of 182. And if you get that $170 push, I would really bring you down to this previous consolidation area. Our MACD would pretty much be overextended, along with RSI probably being in the 50s or sub 50s. So definitely an interesting point then to buy around that $175, $172 region. But for now, maybe it's an interesting buy, but you have to have proper risk management. Basically, the bottom wick of this candle, low of 185.74, would be your get out of dodge basic price, and then we could see continuation to the upside. Let's see maybe how this thing trades for a day or two, just to see if you're going to get that price appreciation on top of your heading into earnings, which stands for exit before earnings, as people like to say. I do think this maybe be a better buy or maybe a better play after earnings. You could gamble a little bit into earnings, but I do not recommend that. I don't recommend gambling at all, and especially with earnings, you would really have to do your research to see what the company is expected to come out for earnings and what is most likely going to be the summation of the market. Now we're going to go into ETD. So this one's a fascinating one. It's a $27 company. The RSI is pushing to the overbought side, but you really, you're coming up on a trend line, but you're having a squeeze potential with the volatility being relatively low. Trend strength is showing weakness, but it's converting to the bullish side, and you have a strong buy signal here. So basically, you're pretty much all fuel to go. You did just have earnings, so this could be that earnings reaction did have a big push up. And if we just look at earnings, you're missing on revenue, but you did beat on EPS. So, you know, that's not a huge miss on revenue, but it is a little cause for concern. But again, this is an estimate, guys. The analysts have their own opinion. They can be wrong, and it is a dividend paying company, so it's very interesting. Now, if you get above, let's say, the $20 basically on the dot, you missed it by 10 cents on the close today, you have a lot of price action that's not really structured, so you could easily push up into the $30 region. Once you get basically to $30, that's where I'd be looking to pull back or have basically price structure retrace back down some, because you would significantly be pushed on the MACD and you basically be making and what I would call an exhaustion rally, just because RSI would significantly be staying in the overbought stage for quite some time, and then people would start taking profits on top of price action zone from previous, and that'd be a pretty massive move. Now, not to say the company can't do a massive move. It has done a massive move historically, so we just have to keep an eye on that. And I do think you have upside coming back down basically anywhere to $26.90 all the way to $26 on the dot would be a buying zone. Do I think that's going to happen? Probably not, because this is a strong price action move to the upside. If we look at the weekly, again, showing similar what we were already just talking about, MACD weakening to the upside and RSI same thing. So I definitely see this continue up very easily to that price zone of the $30 mark. So definitely a strong buy in my opinion. But again, and do your own due diligence, guys. This is my opinion, random person rambling on the internet. But it is looking more constructive than unconstructive, like some of the stocks we just went over in the video. Next, we're going to go to RGR. So this is another one that's kind of interesting. You got two price action zones sitting in between, and you have your MACD basically pinching together on the daily, and RSI is ready to get above that 50 mark. So where do you probably think the thing is going? Probably up. Probably going to come up to at least, I'm going to say, the swing point low here of the $59.44, or have the potential even to tackle $6.42. Now, guys, this area is definitely going to be an area that is going to get rejected off of. It's a price action zone from the previous earnings that basically gapped up, sold off afterwards. And that means, in my opinion, that's going to be the first test. Where you come back down to, you could find price action at basically 5 cents lower than that zone and then pound right through it, or you just consolidate in the zone and keep going higher. Again, you have to be cautious with this one. Now, remember, your MACD is a little over here, so you have a long way on the MACD to go. If you push up here, I definitely think you'd be over this high, so you really don't have to worry about a MACD divergence necessarily, and you have earnings coming up on May 3rd. So all those things combined, it can definitely go higher. However, guys, don't get ahead of yourself. If the company runs into earnings, you buy here, let's say runs into earnings all the way to $60, I basically exit prior to earnings for one reason. I don't like companies running into earnings. It just sets me up for failure going into earnings. I already have the profit. Why don't I just lock that in? And if it has a stellar earnings, it's probably going to continue. It's not going to probably have a basically pop up and fall back down. Yes, it had it here, but I'm saying you can proper risk manage because you have a gap. At the close of the day, you basically buy. Miss out on some of the price action, yes, but you basically have a stop limit set right at the bottom of that candle or slightly below the bottom of that candle, basically saying if it's coming back for a gap fill, I want out, and then you can restructure the price, and basically gives you a range or a fixed loss that you have, and then you determine the upside with price targets. Again, do all your due diligence, guys, not financial advice. So now, if earnings come to the downside, where it could be, $54.50 is an interesting price target. And if you really got to stretch, probably the $50.53 would be another one. So 55.30 and 50.30 would be my two price targets. If I look at the weekly, I do see a little more weakness there. I do have a buy signal here, and you're basically coiling in this weekly. So earnings is probably going to be a catalyst that determines upside or downside. So you could maybe start a small position in this, but understand that earnings can have a very volatile move. If we just look at the previous earnings, the company basically gapped up, I'm guessing 20% before I draw this, about 9.32%. So I was off on that, guys. But again, 9.32%, that could also be the downside. So just be careful of what you're investing in prior to earnings and understand the risk that's associated with buying into earnings. However, right now it's a 1-to-1 risk to reward ratio in my opinion. And if you get that run into earnings, then I'd probably be exiting just because it's really skewing the risk to reward for me at that point. On top of I would have profits. And if you don't move into earnings, then I may be looking for more downside or a massive move up. It's very difficult to tell. Again, proper risk management, understand what the company does, and then the chart's basically telling you 1-to-1. Personally, I don't like trading 1-to-1s because just you don't grow your portfolio that way. But after earnings, then I definitely could see some of this price action be taken out. So you have a choice. You can invest prior to earnings, see what it does, and if earnings pop up here, you take profit, or you just wait for earnings to kind of decide what it's going to do. With these type of smaller companies, you may just see it open the same as it closed on earnings and then push through the day. So just do your due diligence to see what previous earnings reacted and kind of give you a story for that. Next, we're going to go into CRWS. So CRWS, you're a $5.64 company, so you're really on that border of a penny stock. And I just see basically a lot of bearishness on the company, just because if you look on the weekly graph, all you've been doing is making lower lows. Now, you may have finally made or stopped making a lower low, especially with the weekly forming a hammer on the week. So it is a bullish sign on the chart, especially with a coiled up area over here, which if we zoom in on the chart for you guys, as you can see here, you coiled, break the downside, pop back up. So you do have the possibility to continue up higher. However, you have a lot of price action zones that are going to basically hit your head on the way up. So first one's going to be at the $6. Next one's going to be at the $6.49. And that's just the weekly zones. On the daily, you basically have $5.42 and then $5.96 as your resistance points there. Personally, for me, because the company's so close to penny stock level, the volume's not really that high. I wouldn't necessarily be looking to invest in it. And for that reason, I really can't give you a plus minus on it. I can tell you the MACD is curling up, but again, because of the lack of liquidity or basically trading near the penny stock levels, I just don't see the bullishness in the company, and it's a very difficult position to determine because of the jaggedness. Just look on the daily, there's not a lot of liquidity, and my thing is liquidity is king when it comes to stocks. So again, I don't recommend investing in this company just because of the lack of liquidity. If you want to play it for a very short-term gamble, and I say gamble because lack of liquidity, really, you could play the upward side because the MACD is curling to maybe run it up to the $5.72 from $6. So that'd be about a 1.5% profit. But again, I think there's better things to invest and then out there. Next, we're going to go and final company, BN. So Brookfield Corporation, I actually know this corporation because we buy a lot of instruments from them for the laboratory. But besides that, it has, similar to how we cover at NXST, that it has a 50-50 split to the upside and downside. The MACD is basically trying to curl back up to the upside. However, you have a 50-50 split because one, you're heading into earnings, so always 50-50 split. And two, you have a possible, let's say, if the chart actually lets me do this, A to B, B to C pattern to the downside, which projects down to $23.18. But again, that would have to be confirmed by trading below the $20.29 level, or an A to B, B to C pattern on the way up. Takes you about to $35.84, which in my opinion is the more likely of the two, has less ground to cover, and it's going to basically take you up to a previous point of resistance and coincide with price target zone and the reversal zone coinciding probably when you get up there. So I could definitely see there and have a pullback there. On the daily, you have your MACD trying to curl up along with RSI. So once we have that push there, you definitely could squeeze up higher. Your squeeze indication is at 100%, along with a strong 51% trend, and you're starting to trend bullish. So overall things pushing to the upside. Would I be buying here? Possibly, but my risk to reward basically would be if we come back and re-enter the zone of $31.52, keeping the risk to reward pretty nice. And the upside, I would start trimming once we got above the swing point here, probably the $33.82, and then again at $35.16, and definitely closing my position at $36.49. Just overall, the company does pay a dividend, but just looking at the weekly, it gives me a little pause that you had a big push up and consolidated sideways. I do see the MACD pinching together on the weekly, so it may be a longer buying investment in this area, but I do have cause for concern with the MACD basically staying right at 50 heading into earnings. It definitely could create a bullish or bearish reaction. And if we look at the monthly, we can clearly see the monthly is trying to curl back up on the MACD here. So similar to how the market is, but I do think that's luring everyone into a false sense of security, trying to think that's going to be a U-shaped recovery. Now, I'm not saying it can't be, but I'm just saying there's definitely more risk to reward for the downside necessarily if you get a poor earnings. But again, earnings are always a 50-50 gamble. You can't really determine how the stock's going to do because you could have stellar earnings and people's reaction could be bearish, or you could have crap earnings, just say AI, and your earnings quadruple the damn stock price. So definitely something to keep an eye on, guys. Just my own personal thoughts. However, for the upside potential, I have given you that. For the downside potential, if you break this, probably coming back down to the swing lows here, possibly breaking them, and then that's if you break them. If you're shorting the company, probably down to the $27, $26 region, and any lower than that is basically where you make a new lower low and create price structure. On the weekly, 24.49 is where I'd be looking to buy, which would be approximately probably, I'm going to say 10% from where we are now. Oh wow, I'm really off today on the percentages, guys. 23% to the downside. MACD doesn't support that along with RSI. So I definitely think there's more upside potential, and you got those targets in the video for you. And with that, guys, I'm going to conclude today's video. I really appreciate if you guys could give me a comment down below of, do you like this new format of the video? Not really looking at the SMAs, but more of the Lux Algo Zone and giving you a little more details on the price action and stuff like that just based off it. Or do you kind of like seeing both sides? Just throw that in the comment section below to let me know what you think. And with that, guys, like, comment, and subscribe if you enjoyed the video. We'll be doing our market deep dive. Probably it's going to come out on Sunday this week, just because we're going to be slamming you with all the videos from the live stream along with this video. So, you know, YouTube really doesn't like 5 or 4 videos on it. So also it would take us some time to edit it and post it. So be on the lookout for Sunday for that. And then hopefully you guys stick around for that video. We're going to have a lot of jam-packed stuff in there. And hope you have a wonderful rest of your Saturday. Enjoy your weekend. And if you're at work and listening to this, hey, at least maybe you got Sunday off or some vacation time coming up. So with that, I bid you all adieu.